Im Zuge des Fondskongresses 2026 hatten wir mal wieder die Möglichkeit, mit dem Fondsmanager und dem aktuellen Fondsmanager Peter Sartori des Templeton Growth Funds, dem bei uns größten allokierten Fonds in unserer Firma, ein paar Fragen zu stellen. Hey Peter, nice to meet you. And how would you describe the actual style, investment style of the Templeton Growth Fund?
Yeah, sure. Templeton is an active manager based on very thorough fundamental research of individual companies. And we have a very strong valuation discipline. We take a long-term view and we construct the portfolio through bottom-up stock selection. If you had to put us in a style box, we would be in the large cap blend box. It's a core portfolio.
Okay. Now you're not so long in the business as the head of the fund, but let me ask the question for the last 10 years.
Sure.
Since 2015, your fund just outperformed the index 2 times, 2016 and now 2025.
Yes.
Do you think it was okay, and what do you want to change for the future?
Yes, of course we don't think that's okay. We need to do better than that for our clients. So, looking back over the last decade, the fund has had a very classic value approach, and that's been a challenging approach to manage in this market. It's all been mostly about growth and value. At the end of 2024, and when I became lead portfolio manager of the fund, we had a fresh look about how we identify value, and the portfolio that you saw in 2025 still had a strong valuation discipline, but was much more balanced.
Right.
So I think the performance that you saw in 2025 were more representative of what we're going to do going forward.
What success factors distinguish you from your competitors?
Yes, I think one area that's a real advantage for us is our research platform. We have full coverage globally, so a full team of analysts based all around the world, visiting companies and producing research so that the portfolio managers can buy those stocks.
Right.
So I think that's an advantage. I also think that our long-term approach, our analysts are required to model out companies 5 years, and so that backs up our long-term approach. I also think what we introduced at the start of 2025 was a very strong risk management focus for the fund. I think our risk management is as good as you can get in the industry.
If you could name or select 5 stocks right now for very long, which 5 stocks would that be and why?
Yeah, sure. So I have a very good 5 stocks, I think. Quite diversified. The first one I'll mention is Keyence, which is a Japanese robotics company. It provides components into robotics. It has a very strong moat, and no one else really in the world was able to produce the components that they do. The company is high quality. There's also a corporate governance angle. It's a very lazy balance sheet, and we're just seeing the initial signs that they're starting to get that balance sheet working a little bit better. So first one is Keyence in Japan. Second one is Samsung Electronics, which is a Korean semiconductor memory company. The stock has performed very, very well recently in the last 6 months, but it's really just catching up to other semiconductor stocks.
Okay.
It's recently improved its technology so it can sell its product into AI. And it's also got some foundries that it's producing in the US that we have high hopes for. So Samsung Electronics is the second one. The third one will be Honeywell, an old style US industrial conglomerate.
Right.
The important point there is that they have strong businesses and they have an activist investor involved, and you're likely to see one of those businesses being spun out, in the next maybe 12 months, and we think that that'll be a good driver for the stock. The next one is a UK utility company called SSE. We don't like it because it's a traditional defensive utility company. We like it because it's actually a growth story and attractively valued. So it provides, there's a huge demand for energy, particularly going into AI data centers. And SSE is very well placed for that. It did a very large equity placement last year, cleaned up its balance sheet, put it into a very strong position to grow. It was a rare situation where a company did a very large equity placement and the market liked it a lot and the share price rallied.
Okay.
So that's the next one. We think that looks great in the next 3 to 5 years. The fifth, the last one, is a little bit more sexy. It's a healthcare company, but it's a research operation that provides research into the large pharmaceutical companies. So the large pharmaceutical companies essentially outsource as part of their research and R&D to this company. It's called ICON. Healthcare in general has been a tough sector in recent years. They've all derated. ICON is cheaper than it's ever been, and it offers a very good growth story. And there's the outside chance that it gets taken over in the next 1 to 2 years. That's my 5.
Oh, thanks. What do you think, who was the person from who you learned the most in the last years, decades, or whatever?
Yes, interesting question, and I had to think about it. The person that I've learned the most from over the last 30 years is myself. And that's really from learning from mistakes that I made and making sure I don't repeat those mistakes. So that's when I thought about it, I thought it actually myself. But I do have some names for you. I don't want to be boring. So there's 2 iconic investors that I respect hugely, and whenever I get the chance to, read or hear anything that they say, I pay a lot of attention. The first one is Stanley Druckenmiller, who came out of Soros. More recently, in the last decade or so, he has run his own family office. He is an inspiring investor and a very interesting person. And whenever he talks, I learn something, and that doesn't happen too often. So Stanley Druckenmiller is the first one. The second one is a gentleman called Christopher Holm of TCI, who's in the media very recently because his firm just had a fantastic 2025. And he is, long-term, fundamental, goes against the grain when he needs to. Very low-profile guy. I respect that a lot. And he also provides a lot of money to charities. His hedge fund is set up to help charities, so I respect that a lot. Last person I'll mention is a long-time, high-profile investor, author, who's no longer with us. He passed away a few years ago, called Barton Biggs, who has a lot of experience. He was a strategist for decades, had his own hedge fund, but he is a brilliant author, a brilliant writer, and I always really enjoyed reading him. And I could highlight one of his books, which is very relevant to today. It's a book called War, Wealth and Wisdom, and the author is Barton Biggs. Okay.
Thank you very much. It was a pleasure to get the insights. For the stocks, I think I will watch them, and also the books, something to read. So thank you very much, Peter.
You're welcome.
Auch Ihnen vielen Dank, dass Sie zugeschaut haben und kleinen Einblick bekommen haben in dem, was wir täglich tun. Wir fragen die Fondsmanager, was sie denken und wie sie es einschätzen. Vielen Dank.